Hello, everyone, and welcome back. In today's video, I'm excited to be accompanied by my good friend Chandler. We're trying something new out for this channel. So, I've been exploring the idea of doing some sort of weekly podcast or show, and this is really going to be the first iteration of that. So, you're going to be learning alongside with us. Please let us know what works, what doesn't work below. Our goal is that this becomes something that we do every week, just a fun thing for us to cover what's going on in the crypto space, what's going on with Ethereum, etc. So, without further ado, I want to introduce Chandler. Chandler, do you want to give a brief background on what you've been up to in the crypto space, what you're working on now, etc.?
Yeah, thanks, Justin. You and I worked together on Astaria. This is how we started our conversation, just in terms of what we've been seeing in the industry. And we felt like our discussions, got into some interesting and meaty topics that I'd love to share. What we've been thinking about from our side with the rest of your audience.
Awesome. And so, what were you doing before Astaria? How long have you been in crypto? Where are you based out
Yeah,
of?
I've been in crypto since about 2015, 2016, when I started getting into Bitcoin. From there, in about 2017, started working in this space for a company called Luno, which was a centralized exchange. And roughly around DeFi summer, moved into the DeFi ecosystem. This is where you and I met a little while ago, and I I got Astaria pulled from you directly, which was a great which was a great kind of like meeting of the minds, and really excited about what we're building together.
Awesome. So, I guess we should jump into it. So, the first topic, I think it's going to be on everyone's mind because the airdrop's happening tomorrow, is the Arbitrum airdrop. So, I'm just gonna share my screen here, and then yeah, Chandler, I'm curious that did you get any tokens? How'd the airdrop fare for you? What are your initial thoughts? I've I've got a lot to say about this one, I think.
Yeah, I did get some tokens. I think the distribution was fairly wide. I know, we've chatted about this before, but you've got some thoughts just in terms of like the Sybil resistance around that. I think this airdrop realistically is a front and center showcase for L2 summer. We're well into L2 summer. I think some of the hype trains that are kind of going on with the other L2s that have either committed to doing a token or have the potential of doing token, like the ZK Sync EVM at the moment, and then the Scroll team. They've seen massive adoption based on this. So people are, I'm assuming, fully into the whole airdrop farming kind of like design patterns, in terms of bridging to the ecosystem, doing some activity on chain. It's so cheap there that's kind of actually a viable concept at the moment, which is fascinating. And so yeah, this has kind of been a bright spark of news over the last few weeks of what can only be kind of described as grim. And I think that this airdrop's gone down really well. One of the kind of interesting points that I've always noticed with airdrops is that you get a lot of people being very upset, vocally being very upset in the beginning, and as soon as that kind of dies down, the incentive programs, what you can do with the token, and some of the community elements really kind of bind together. So yeah, I think Arbitrum also successfully made everyone equally unhappy, which is a good sign for any airdrop.
Yeah, it's you can see here I'm connected on my justinbram.eth public address. You can see I didn't get any tokens in this wallet, but I'm not I'm not bitter because of that. I think in total I had just under 7,000 tokens across a few wallets, but one thing that interested me, and you can sort of see this based on the criteria, and then if you switch over to their actual governance docs here, it's really interesting how they structure the airdrop. It's sort of rewarded Sybil attackers, or not attackers, but people that Sybiled the airdrop, meaning they basically used Arbitrum on many different wallets to become eligible across many different accounts. I didn't do that intentionally, but that's how it worked out. But actually, they didn't really block Sybil users. So you can see they have a few criteria that if you have any of these things happen, like this one wallet, all of the transactions were just in a 48-hour period, or if the balance had under a certain amount of ETH and hasn't really interacted much, you would lose a point, but you wouldn't be disqualified. And so what this means is, from everything I can tell, a lot of addresses received a small amount of tokens, and very few addresses received a big amount of tokens, which sort of favored Sybil attackers. So I'll actually share this tweet from Nansen, who did the analytics for the airdrop. And you can see here it's really interesting. The most common airdrop size was 1,000 to 2,000 tokens, which with a 10 billion token supply is pretty tiny, right? Obviously, we're not complaining. It's free money. It's great. But just really interesting how the distribution worked. And it felt like it favored a bit folks that had multiple addresses, whether they were intentionally sibling the airdrop or they just used many addresses. I mean, what are your thoughts there, Chandler? Does it matter if you're like incentivizing Sybil behavior? Does it not matter? Do they just need TVL and users?
Yeah, Sybil attackers, airdrop farmers. It's a phenomenon that we have in our industry that I think is really hard to combat directly against. And I kind of think, if you can't beat them, have them join you. And so I really like this mechanism. It worked out really well for Arbitrum. I think this is a step forward in terms of kind of taking the airdrop farming. We've kind of agreed that it's a negative outcome and a lot of short-termism in that kind of like process, and like bring that into something that's a little bit more longer term for the ecosystem. I think this is one step further in that direction. I don't think it fully encapsulates that, getting airdrop farmers and making them sticky. But it is something that I think is a bit more progressive in some of the airdrops that we've seen before. And realistically, I think this has got a lot of people more excited about L2s. Bridging to L2s is a kind of what I've noticed in kind of when you look at some of the bridging data that exists. Many people go from L1 or a different L2 into a specific L2 in itself. And I fully expect a lot of that liquidity and a lot of that activity is going to be sticky, right? For every 100 ETH that goes on to L2s, how much of that really comes back? And so I think that these sort of concepts are really valuable for growing the ecosystem, in the L2 ecosystem. And what we're seeing here as well is that the bridging from the excitement from Arbitrum is not only affecting the Arbitrum ecosystem, but there's some sort of spillover from these farmers going into the other ecosystem in the anticipation of an airdrop. So I think this is net positive in terms of the flows, and really the kind of time and effort from the development teams and the kind of ecosystem is to try and make that those flows into your ecosystem a lot stickier.
Yeah, it's interesting here. So on that note, I pulled up this Dune dashboard that shows ETH deposits into ZK Sync, and you can see right when the Arbitrum airdrop was announced, there's this been crazy inflow of people speculating. I think ZK Sync actually has already announced, as far as I'm concerned, that they're doing a token. I don't know if they've said they're doing an airdrop or not, but you can basically imagine there has to be some way to distribute the token that makes it, like legally justifiably decentralized. They're going to have to make that case, presumably, if they're ever under an SEC inquiry or something like that. So there has to be a fair way to distribute the token. That's probably how they're going to do it, and you can see the market sort of betting on that. One other thing I wanted to share. So in 2021, at the end of 2021, early 2022, I was sort of calling for the end of the big airdrop. And I think we have seen airdrops, the frequency of airdrops go down. But I think with Arbitrum and Optimism and the success they've seen with their airdrops, we're going to see more and more airdrop programs. And so I don't think the airdrop is dead just yet, as I might have thought it would have been a year ago. You can see in a futures market here, an IOU token that represented the Arbitrum token was trading at $9.60, which is insane. That's like an $100 billion FDV. And then this market just launched. So if you're seeing this before the token is transferable, you can actually use this OTC market to basically trade your future Arbitrum tokens. So if you want to sell your tokens, if you want to buy more tokens, if you want to short Arbitrum, you can actually use this. Not endorsing it as far as like how security goes. We obviously haven't looked at the contracts, but it's just really interesting. You can see sort of how people are lining up and positioning themselves to buy Arbitrum or to sell Arbitrum. And you can see here are the executed transactions. They're usually about at a $1.30 price for Arbitrum, which is about a $13 billion FDV, which is a few billion higher than Optimism. So pretty interesting stats there and very, very much worth noting. Chandler, do you think Arbitrum has a better network effect than Optimism?
I mean, Arbitrum and Optimism are the pioneers of the L2 ecosystem and the whole L2 narrative. I think they're equally on par in terms of like mind share. They almost get mentioned side by side in kind of every news article or every news announcement as the spearhead of the whole Ethereum ecosystem L2 directional like flow and the whole directional like roadmap. And so I think from a long term view, they're kind of going to compete, and sometimes Arbitrum is going to be ahead, sometimes Optimism is going to be ahead. They might be kind of diverging in some of their technology stacks, and I kind of find that that's the most valuable position for our ecosystem to be in, where you've got these two really high quality teams building out their infrastructure and have somewhat diverging kind of tech stacks. What I also think is kind of interesting, and tying it back to the profitability of some of these airdrops, is that we're seeing kind of concepts like the super chain. We're seeing concepts like the OP stack, where it's not exactly as easy as like build your own L2, but it's becoming far easier to actually build out an L2 than it was when these L2s were first being designed, and that makes it kind of interesting that I suspect a lot of teams are going to see how profitable it is to launch an L2, and just kind of we're going to see a Cambrian explosion of them built on Arbitrum and Optimism's original design patterns, and there'll be many forks of that. I've seen it with the base token and Coinbase, but I mean, Coinbase is helping the Optimism team build out that. So it's a bit more of a harmonious relationship. And so I think that the L2 season is going to explode. We're going to see a lot more L2s popping up, a lot more entrepreneurial folks are going to try and fork some of these designs and build their own versions of that, and ultimately launch more tokens. And I think that the L2 token cascade that we're going to see in the next short little while will be very similar to the ICO craze that we saw in the 2017 run, and the kind of liquidity mining DeFi craze that we saw in the 2020s.
Yeah, we spoke a little bit about this before, but it is like the success of these L2s, especially like their valuations today, are extremely high, and it sort of makes it hard to believe that an alt L1 that's just an EVM chain would be able to succeed slash compete, especially because like Optimism and Arbitrum and then all the ZK solutions have like it feels like won over the community's heart and crypto's heart. Like I get Solana, right? They're trying a totally different approach, but for Avalanche and an EVM, an alt L1 EVM chain that's functionally very similar to just a layer two, like it's hard to imagine the real use case for Avalanche. And so I think we're going to see much fewer alt L1s come to market over the next few years. I think we're going to see this L2 rotation game where a lot of these L2s go through their own hype cycle. But we'll see.
Totally
Very
agree.
much TBD.
Yeah, I totally agree. And if you think about the cost of launching an L2 and how much you get for free from the tech stack, from the research that's gone into it, from some of the bridging infrastructure, from some of the kind of like, settlement logic that you don't even, the network effects that you also get from some of the apps that can launch on your L2, it just makes it so much easier to launch an L2 as opposed to an Alt1. That being said, I still don't think people aren't going to try launch alt L1s. I think launching a EVM compatible alt L1 doesn't make any more sense. And so I really hope that many teams that are looking at wanting to create alternative blockchains really follow the Solana route and try something new and interesting and innovative. That's a lot more interesting than launching something where you really are going against the grain from the L2 kind of position that L2s are in versus what launching an alt L1 would look and feel like.
Yeah, no, totally. So the next topic we wanted to talk about was, I'm sure a lot of you guys have seen on crypto Twitter, is Balaji's crazy bet. So if you don't know, Balaji was the CTO at Coinbase. Very well respected person. I think the consensus is he's certainly a brilliant thinker. If you're not familiar with him, if you search his name on YouTube where you're seeing this, you'll see he's done like an 8-hour podcast with Lex Friedman. He talks a lot. He goes on a bunch of these podcasts. but he's a well-respected thinker, and that's why crypto Twitter and the whole crypto space is sort of shocked that he came out with a bet. He bet $1 million that the price of Bitcoin hits is over $1 million in 90 days, which I think we can all agree, like as bullish as we are on crypto, that's a bit insane. That would be one of like the craziest 90-day runs in BTC's history, especially now, right, where the economy is in an uncertain space, the Fed's potentially still tightening. That it seems hard to believe that the price of BTC gets that high. Um, but yeah, what are your thoughts, Chandler? I mean, this seems like a crazy bet on his end. He's basically betting that the dollar is going to hyperinflate over the next 3 months, which again I think is very blown out of proportion. But yeah, I mean, what are your thoughts? Are you on the BTC train with Balaji, or are you, are you not?
It would be amazing if he was right, but I mean, let's call this for what it is. It's a PR stunt. He knows it, and I think his sentiments on why he's what he's basing a lot of this bet on is true at a fundamental level. And I don't think that his read on the ecosystem in terms of like hyperinflation, banks failing, and this concept of Bitcoin being a stable store of value are wrong. I just think that the sensation of being able to go from Bitcoin being just under $30,000 to a million being somewhat unrealistic. But I mean, that's kind of the reason why he wanted to do something out there and outlandish, because that got a lot of attention. It brought together a lot more eyes on his particular viewpoints, which I think we're going to see a lot more news coming out of that in the next couple of days, just around what his thoughts are. And so I think he successfully did what he set out to do in terms of just bringing awareness to what he's seeing from his point of view, and creating a public discourse around that.
Yeah, I think he has been successful at that, and I agree. I mean, we talked about this before. I think it is a PR stunt. I think it's pretty evident just because a rational actor, if they wanted to maximize their own profits, they would just buy the Bitcoin today as opposed to betting $1 million on it. You could, for $1 million, you could buy so many more BTC at like 28,000, which is where we're at, than, waiting 3 months to win that $1 million bet. Or you could just buy options. So I was actually looking at an options exchange for BTC. The highest strike price you can get, it's pretty interesting, is only 100K now, and that's for 3 months from now. So you can buy an 100K strike price BTC for like $30, something very small. So he could have bought BTC today. He could have just bought the options. But yeah, to your point, instead he wanted to, have this very public bet, which yeah, he's gotten a ton of publicity. The $1 million is probably not too important for him. He's very wealthy, and he has got people thinking. I mean, you can see on this chart here that he tweeted out, yes, over the long term, the dollar has been very down against Bitcoin. Also, over everyone's lifetime, the dollar will be deflated by 99%, presumably. Um, but still, to assume that BTC goes that up that much and we see hyperinflation, I think is very unrealistic, regardless of what your stance is on what the Fed's doing. So
Yeah, and let's get kind of quite specific about his claim of hyperinflation. I think that is also an extreme view. Hyperinflation very rarely happens in the world. There are a few cases. There's Zimbabwe, and there's Venezuela, and there are a few other examples of that. And those are extreme conditions where institutions fail, and institutions need to fail pretty badly for that to be the case. And it's often when the central bank or the kind of monetary authority in a country loses its objectivity and its credible neutrality. And I think right now the US is very far from that being the case. Like, the Fed still has a lot of credible neutrality amongst it. I think there are some concerns around that at the moment, specifically with some of the political discourse that's happening. But I think it's not been the first time that the US has had those sort of discussions, and I don't think that this is going to be any different to what we've seen in the past.
yeah, no, I agree. I mean, it is scary to see how political the Fed's job is getting. Like, I think from both sides of the aisle, we're seeing everyone critique Powell because it's easy, right? You appeal to your constituents, you yell at the Fed, and if you see unemployment rise, it's not the politician's fault, it's the Fed's fault. So I think we're going to see more of that, for better or worse. But yeah, I agree. I don't see hyperinflation coming to the US. I'm actually curious. So you're South African. What's the inflation rate in South Africa right now?
Yeah, South Africa is a small but open emerging economy, which means we're very much exposed to a lot of the interest rate changes. South Africa typically targets an inflation band that's at 6% currently, roughly around the 6% mark, which is slightly higher than most of the world. And so what like often happens from an emerging market perspective is you target a band, so a 4 to 8% band, and as long as you're within that band, you can kind of have a bit more control in terms of what your inflation rates are. But realistically, and kind of based on the fact that we're a South Africa is a net importer, we're always going to have some sort of like higher inflation rates. And I think from a perspective of like interest rates, because we have a slightly higher inflation rates, we also have slightly higher interest rates, which is great for like investment and when kind of the global investment, financial direct investment flows come into South Africa, it's normally to kind of capture that higher interest rate market. And so when the world gets a bit more risk on, you see a lot of inflows into countries not only like South Africa, but your developing countries like India and Brazil that are also within that band of like small developing opening economies. India is slightly bigger than South Africa and Brazil, but it's still part of that financial flow based on interest rates.
Cool. And then I think the last thing on this topic worth covering is just ETHBTC underperformance. So I think people have been a little shocked the past couple weeks. ETHBTC has not been performing as well as it has. I think it's at like a maybe almost like a 1 year low, something along those lines. There's been a lot of chatter. Obviously, no one knows why the market's doing what it's doing. It's probably just a random walk, but I think a lot of people are saying like this is BTC's time to shine. We've seen banks fail. BTC is digital gold. We should buy it up. I think that's part of it. I think another part is just the uncertainty around Shanghai. So I lean that it's slightly bearish short term, and then obviously in the long term it's bullish. But at the end of the day, like with Shanghai, new ETH supplies coming onto the market that's been locked up, the vast majority is going to be restaked, but like some portion greater than zero is going to be sold. So who knows what that effect is going to be? I think it's going to be a little spooky at first. I think the day withdrawals are come online, the queue is just going to get blown out for many weeks or months, and it's going to look like everyone's withdrawing. I could see a little panic happening there. And so, yeah, I think this ETH BTC underperformance is all part of that. I mean, what are your thoughts? Is this just randomness? Is this BTC's time to shine? Is the crypto 4 year cycle fully in play and this is just how it works and it's random? What are your thoughts?
You have way more of a rational thought pattern around this breakout price. It's 100% determined by Balaji. Like he's deciding that the Bitcoin price needs to rally and the ETH price needs to stay the same. That's how he's gonna break. That's the explainer here. I actually, jokes aside, and kind of like in a bit more of a positive light, I'm really glad that Bitcoin's doing something that's not like kind of correlated to the vast majority of the industry. I'm not particularly sure where some of this is coming. But if you kind of are still somewhat plugged into the Bitcoin world, we're seeing a lot more development in the space. Kind of the latest craze that we saw with the ordinals, they had their moment. But again, just like when you kind of prove a concept, you're never going to be able to get somebody else to not want to try that again. So I think that the concept of developing on Bitcoin is like been proven with the ordinal side of things, and you're going to get a lot more people that are going to try that, right? And so that's going to be really exciting to see what comes next. I think that the cat's out the bag. You can do more with Bitcoin than just send transactions. I also see things kind of really maturing on the Lightning side. I also see the development of Taro, which is like basically going to bring ERC20s and NFTs to the Bitcoin network, being something that's going to come out fairly soon. So things are happening in the space. I think Bitcoin's development has purposefully been slow for a long time, and that kind of momentum is changing. I still think it lags quite far behind in terms of the infrastructure that we have on the Ethereum side, with the amount of investment flows, the amount of developers coming through, the amount of projects starting. But I mean, like Bitcoin has been the OG token or coin for our entire industry. It started everything. You kind of you have to remain kind of like humbled by the fact that Bitcoin has still lasted this long. I mean, say what you want about proof of work versus proof of stake. Proof of stake stood the test of time. I mean, it's a great system for remaining credibly neutral and kind of building out a decentralized network. And so I think, Bitcoin having its time to shine, it's just a net positive for the entire industry as a whole.
Do you think, I mean, this is sort of on the same note, do you think the halving matters? Is that just a meme that like people will be brought in over the next year and excited about the halving? But like from my perspective, I can't rationally think that this ETH BTC underperformance, meaning BTC doing well, has anything to do with the halving. Just because it's going to go from a 2% inflation rate to 1%, which is pretty negligible. And then also, I mean, you're kind of seeing, I'll just share the ultrasound.money page where you can track ETH deflation. I think you're kind of seeing that like these markets are, I don't know, more random walks, right? Like the demand side almost matters more than the supply side, right? Like BTC had its highest outperformance when it was most inflationary. So you kind of have to, wonder how important that is over the short and medium term. I think over the long term, it makes sense that if ETH deflates at like 1% or 2% or 3% a year, that's something. But I don't know. I don't think the halving actually matters. I think it only matters because it's a meme. What are your thoughts there?
There are two schools of thought that I think about when kind of talking about the halvening. One is, expectations matter. So people expect the price to increase, therefore they, position themselves to make the price increase, and then that becomes a self-fulfilling prophecy. And everyone goes, oh no, the halvening's not priced in, or it is priced in, and kind of, we still see these super cycles based on the halvening. And I kind of think that model is based on the fact that stock to flow was the big kind of like thesis point that was driving
Yeah.
many people's fundamental belief on the price of Bitcoin. And that's been proven to be wrong or somewhat slightly incorrect. And you kind of want to make sure that, you're a bit more kind of thoughtful on the way that you're going to price the Bitcoin halvening in the future. And I think, we're seeing more people talk about that and kind of extending that idea to kind of capture things. So I think the halvening is a super cycle kind of meme totally, and that's why it kind of exists. And I think you'll see some price movement because people fundamentally expect it to, and therefore it will be a self-fulfilling
Yeah.
prophecy, and it'll kind of go on. Whether that trend continues in the future and kind of in perpetuity, I think it won't.
Yeah, I completely forgot about the stock to flow model. It's kind of funny how that faded over the last year. For those that don't know, it basically predicted like a rise in the price of BTC based on every halving, based on the supply. And you can see like I think this chart says by like 2025, BTC would be $1 million. And I think by like 2029, it would be $10 million per BTC. Maybe that's more aligned with Balaji's point of view than ours, but I think that's a little far fetched now. But in any case, for the last topic, Chandler and I always joke that everyone in the crypto space eventually graduates and becomes a economist, and so we'll put our economist hat on and talk for just a moment about the Fed. I don't think we have too much to add that you guys probably haven't been seeing on other podcasts, but yesterday the Wall Street Journal reported that the Fed increase is still undecided. The Fed's in a tough spot and facing a tough decision here. But you can actually see that as of just now, the market's basically saying that there's a 90% or 87% chance that we're getting another 25 basis point increase. And the market's basically saying that that's the highest that interest rates are going to go. And I think people in crypto are like really worried about these things. I'm not sure how much it matters. Like, how much is your shitcoin on Arbitrum affected by a 25 basis point interest rate hike? Probably not too much, but it does change expectations. Um, yeah, what are your thoughts there, Chandler?
Yeah, I mean, the Fed has to respond. It's got a mandate to keep inflation down. We spoke about inflation a little while ago. While we don't agree that it's going to be a hyperinflation environment, it's still a high inflation environment relative to the historic past for the US. And so, whatever your political leanings for these interest rate hikes are, it's something that needs to happen. I think, interest rate hikes are painful, especially if you own a lot of debt. but these inflation is on average a bit more painful than higher interest rate environments. And so I think this is an interesting topic to talk about. You mentioned that everyone lives long enough in crypto to become a macroeconomist, and like that's totally true. And if you see what crypto Twitter is kind of like putting out there from various different opinions and different takes, often many of them wrong. Haven't got a fully formed picture around it. But I think from a mental shift, that having higher interest rate environments for the foreseeable future is something that most Americans and kind of the broader crypto economy will have to take into consideration. The tie-in effect between how much that actually affects crypto, I think, is going to play out in various forms. I mean, we've just seen some of the bank failures. That's kind of something that's interesting, and the contagion of that and how it affects crypto. That's going to be quite interesting to kind of like see play out. And yeah, I'm fascinated to see the overlap between interest rate environments and how that affects,
Yeah.
my bags and
Yeah.
MetaMask.
Yeah. My closing thoughts would be probably not to worry too much about a 25 basis point hike, no basis point hike. Because so for the tech industry, it's very important, like NASDAQ stocks, high growth tech companies, right? Like their ability to scale is partially impacted by interest rates, right? It makes it more expensive to take out debt to finance things when interest rates are high. So for high growth companies, it's tough. But things are like people have associated that with crypto, but it is different, right? If you're talking about BTC and ETH, I would argue we're not like these markets are not really affected by rates, except for the fact that people think it will be affected by rates. So I think it's a lot of memetics. But at the end of the day, we don't have to discount Ethereum's future cash flows from 1559 because interest rates are higher today, right? That's just not how crypto works. And of course, it doesn't affect BTC just because there's no return opportunities on Bitcoin. So for me personally, I think people care about it, so it matters, but I don't think it has like a true impact on crypto's future and the future growth in this space. I mean, we're seeing a ton of investment from VCs still. And so I think in the long term, it won't matter, but obviously there's going to be some choppiness over the coming weeks. But with that said, I think we'll end things there. We've gone for about a half hour, and Chandler and I chatted, and we want to kind of keep these initial episodes short while we're still getting our bearings. If you have feedback for us, please leave them in the comments below. But other than that, thank you guys so much for watching. If you liked the video, please subscribe and make sure to catch us next week when we come out with another episode. Thanks, Chandler.